Interest rates are very low, and the Fed plans to keep them pretty low for a long time. So how can investors take advantage of this?
Well, again, a lot of investors look at low interest rates as being a negative. Bond yields, everybody's complaining about money markets, bond yields, blah, blah, blah. And like you said, they're going to stay low. A lot of clients have built more capital. We've negotiated margin rates of under 1%. And what we're finding is that some clients are borrowing just to pay off home equity lines. If they're at 3.5% on a $500,000 home equity line, they can get it down to under $1 million or even $100,000. They're saving thousands of dollars a year. We hear from retirees all the time, oh, I want more income, more income. But if they can save on their, on their liabilities and cash flow, it's the same, right? The Fed this is what they're trying to do to pump up our system. They're letting us borrow. Again, our clients can borrow at 0.8, 0.9% right now. Obviously, that might change. So anytime you can borrow at that rate, you'd hope that a professional investor could get you more in the marketplace, or I would be firing them.
Do you think that the Fed is going to leave the rate at zero until 2014, late 2014, or is there a risk that they'll bring they'll institute an increase?
That's a great question. There is risk. I think the big risk of them increasing is that next time, knock on wood, that this happens and that they say this, they're going to be a lot less credible. So I think there's a lot of pressure on the Fed to keep it through 2014. But the interesting thing about some of these structures, and at Biltmore and at other firms as well, is that you can lock in rates. So to lock in a 10-year fixed rate of borrowing for just over 2% still, it's pretty attractive. So if people are worried about that, there's transactions they could get into to hedge themselves.
What advice would you give someone who's still a little bit nervous to take on debt or even refinance just because of the financial crisis over the last few years?
Sure. Well, first of all, we tell all our clients that something might make economic sense, but they have to put their head on the pillow at night and live with whatever's going on. And we don't want them waking up at 2 or 3 o'clock in the morning saying, oh my gosh, I can't deal with this situation. So, I think it's on an individual basis, they have to figure out, hey, does it make sense? And we're right now where they have the debt out there, and they're just kind of moving it into a margin debt maybe from another type of debt that makes sense. And for some people it doesn't make sense, but I think this is a very interesting time where our generation has never seen these type of low rates, and I think we need to take advantage of it.